Good evening, ladies and gentlemen. Thank you so much for joining us for tonight's edition of HR Mentorship Learning Series. We'll be looking at a very interesting topic today. My name is Oluyemi Adeosun. The topic we'll be looking at today is understanding total rewards. And our facilitator is Felemu Daniel. And I would like to read his profile so you can see how and why he's eminently qualified and competent to facilitate this session. Daniel is a dynamic human resource professional with expertise in recruitment and selection, compensation and benefits, employment litigation, and statutory reporting. He drives legal and industry compliance for employees, employers, and service providers by interpreting regulatory requirements and embedding best practices across the HR processes. His career spans agro-allied, automotive, maritime, construction, and also the banking sector. He has led talent acquisition, designed and developed competitive reward programs, and also ensure regulatory filing. Ladies and gentlemen, he excels at aligning human capital strategies with organizational objectives to foster a high-performing performance culture. He is a member of the Chartered Institute of Personnel Management, is a member of the Institute of Chartered Accountants of Nigeria, ICA. So you can see the dual certifications relevant and appropriate for total rewards. He also has an MBA from Obafemi Awolowo University, Ile-Ife. He has a Bachelor's of Science in Accounting and Finance from Bells University of Technology, Ota. At the moment, he is the team lead, compensation and benefits with Sterling Bank PLC. All right. Previously, he was team lead, compensation, benefits and welfare with Nova Bank PLC, deputy payroll manager, Kappa and Delbato PLC, account executive, TOG Shipping and Offshore Management Nigeria Limited, account officer, services, machineries and trucks Nigeria Limited. Ladies and gentlemen, speaking to us on the topic, understanding total rewards, I present to us Felemu Daniel. You have the floor, sir.
Thank you very much, Dr. Oluyemi Adeosun. Thank you for the privilege once again to facilitate such an interesting topic. And the topic before me is understanding total rewards. And without further much ado, I would go straight into the order of the day. So the outline before us is total rewards, understanding total reward. The reason why this topic was selected is because before now, I had carried out quite a number of profound research, and I found out that a good number of HR professionals either run away or shy from as a result of phobia or as a result of, will I call it fear, of the nuances evolving around total rewards or compensation and benefits. And it is in view of the importance of the terminology that I have considered it, prerogative to take this session, to facilitate this session. Before now, I'm sure a number of us must have had encountered different webinars on total rewards, compensation and benefits. But one thing I have found, missing out is that many at times the rudiments, the backgrounds, the beginners level knowledge orientation are always missing out. Thereby, non-total reward experts often, frown at the profession. I put it to everyone this evening that, with every sense of humility in me, I put to everyone this evening that there is no profession that is much more interesting and much more rewarding than total rewards in the HR sphere. By the grace of God, I've been privileged to manage compensation and benefits for over 7 years. I have over 12 years experience. So one of the take home I want us to have before me today is that you don't have to be an expert to earn well in total rewards. And also you can earn big as an expert in total rewards. I'll take that again. You don't have to be an expert to earn well in total rewards. However, that is given to the subject of continuous practice. Also, you can be an expert and earn big in total rewards. Within my community, I have a good number of networks of total reward experts that they manage payroll within the nation. I also have a good number of total reward experts that manage intercontinental payroll. Talk of Africa, talk of Asia, talk of what they call it, Europe or North America. So I believe that my introduction will at least stimulate someone to give listening ears to why the profession of total rewards is ever rewarding. So the outline before me goes thus: definition of total rewards, components of total rewards, compensation philosophy of total rewards, compensation philosophy factors evolving around total reward, constituents of salary and pay structure, regulations guiding compensation and benefits, payroll computation, and administration. Definition of total reward. Total reward is a combination of compensation, benefits, and rewards that employees receive from an organization or from the organization. It can include salaries, wages, and bonuses, as well as recognition, workplace flexibility, and career opportunities. Total reward is an integrated approach to employee compensation and benefit that encompasses all the tangible and intangible elements provided by an organization to either a new hired or an employee. It includes financial reward, non-financial reward, designed with the aim of attracting, motivating, and retaining employees. If you find yourself in an organization where the compensation philosophy is not geared toward attracting, towards motivating, towards retaining you as an employee, trust me, you might be in the wrong place, or you might have to reconsider while you are in that organization. Compensation and benefits is a sub-discipline of human resources focused on employee compensation and benefits policymaking. While compensation and benefits are tangible, there are intangible rewards such as recognition, work-life, and development. When you combine the intangible and the tangible, you have what you call total rewards. The elements of total rewards are compensation, benefits, work-life balance, performance and recognition, development, and career opportunities. This will further bring me to the components of total reward. We have the financial reward and we have the non-financial reward. The financial rewards entails the compensation and benefits, while the non-financial reward entails work-life balance, recognition, career development. Now, I want to start with the non-financial reward, and I will narrow it down to financial reward. Non-financial rewards entails work-life balance, performance and recognition, career development. Work-life balance speaking to the wellness and the well-being of you as an employee of an organization. Many a times we find ourselves in organizations where, I've been there too, we find ourselves in an organization where, apart from the salary, there's nothing to take home. And when I say nothing to take home, I mean nothing to take home. Possibly because of, as a result of, the poor working condition, possibly as a result of the poor culture, possibly as a result of having a bad supervisor, possibly as a result of finding yourself in an environment where you cannot even, it does not even motivate you towards career development. Speaking to the wellness and well-being of an individual physically, do you know many a times you find yourself as an employee, you wake up in the morning and you're not motivated to go to work. This speaks to work-life balance. Are you even motivated to go to work? Is there anything that is even pushing you? Tomorrow is a Monday, God so good. Those in Lagos knows how the road can be, especially if they are returning back from the island. So take a look at your mental well-being. Talk about the traffic, talk about the gridlock, talk about, there's some people I call in the workplace, I call them best friends. People that, they always bring all manners of dishes to your table. Talk about dishes about employee misconduct, talk about employees not obeying policies, talk about lateness to work. As an HR professional, it is important for you to know how to balance your work ethics. Talk about your recognition. Recognition speaking to achievement and status. I'll narrow it down to achievement vis-a-vis your milestone accomplishments, or probably as a result of long service benefits. Now, talking about career development speaks to the ability to learn on the job, the ability to learn and earn vis-a-vis job shadowing, vis-a-vis job hunting, vis-a-vis mentorship and mentee nurturing. Talk about professional certification. Talk about professional enhancement. Total reward is meant to encompass both the non-financial reward and the financial reward. I will narrow it down to a job offer, or let me call it an offer letter. When you take a look at a typical job or a typical offer letter, you realize that you will see the pay analysis stipulated, you will see the financial rewards, you will see some non-financial rewards, but it doesn't apply to all organizations. So that is why, as an HR professional, it is important for you to know that at the point of new hires joining organizations, you have to be intentional about how you reward them. Remember, I mentioned earlier that the 3 reasons why you manage reward is either to attract, to do what, to motivate, and to do what, to retain. So speaking to the financial rewards entails compensation vis-a-vis the fixed pay, vis-a-vis the variable pay, vis-a-vis the primary benefits attached to the overall pay pegs of a new employee. I'll be proceeding. So we're narrowing down to financial rewards of compensation. We have the fixed and we have the variable. The fixed pay comprises of elements of employees' salary that are paid as fixed amount and at a defined time in line with the contract of employment. The fixed pay typically entails basic salary and allowances paid monthly, quarterly, or annually. We have the basic salary, we have the cash allowances, we have the lump sum grants, and we have the monetized benefits. Variable pay are elements that are not what? They are not, how will I explain it now? They are typically dependent on variables such that an employee will have to attract it as a result of a given circumstance. How do I imply? It means that it is attached to a particular target. It is attached to a particular objective. Variable pay could be either short-term incentive, it could be long-term incentive. So if it is short-term incentive, what it implies is that they are delivered based on predetermined or performance criteria. We have the likes of sales commission, the likes of performance bonus, the likes of annual incentive plan, the likes of discretionary bonus plan. Now, the purpose of short-term incentive is to align employees' compensation with achievement of annual performance goals and provides competitive annual cash compensation levels to attract and retain top talent. One thing I find very interesting about total rewards, the truth of the matter is that if you find yourself in total reward, if you consider it a profession to pursue, it will expose your knowledge about a lot of things happening in different industries. By the grace of God, I've been privileged to work in the banking sector. And one thing I've realized in my short stay in the banking sector is that we have so many attractions for new hires. But in as much as these attractions are there to coerce you, such that you'll be so attracted and you would not even take a look at the salient traps. I'll give an instance. You don't take a look at the salient traps that you should read over to understand before you sign an offer letter. I'll give an instance. I remember I had a friend recently that called me. He's a senior executive in a different bank. He called me and he was like, "Oh, I have a friend. He needs your advice. He secured the role in so and so bank, and they are trying to coerce him to join them. They even sent him an offer letter." And I was like, "That's interesting. So, okay, so why are you engaging me?" He was like, Felemo, I know that if you should go through it's meant to be confidential, of course, but in confidence, was like, I mean, we should peruse the offer letter. You can tell us what is applicable, what is. And I asked the question. I said, I don't need to see the offer letter. I said, can you just tell me those attractions other than the salary in the offer letter? And was like, they are giving him Mungo salary. I said, that's not what I'm talking about. I'm talking about the other attractions. I'll give a salient point. One of such is, what is the interest rate attributable to the loan of that organization? Now, this is peculiar to banks. For example, you might be going home with, let's say you might be going home with 5 million naira net salary, 4 million naira net salary in a month, fine, exclusive for other perks. But what about the loan interest that organization has attached to their, for their staff to be able to access loans? And I asked him, and he said, "Pobere question, meaning that he didn't ask the question." I said, "Why didn't he ask?" I said, "Do you realize that where you are living is paying?" I'll give an instance because I want to be very professional in this. Do you realize that where you are living, the loan interest rate is 3.5%, and you have a loan of how much? Outstanding of how much? He said 24 million. Okay. Now, if you go to that organization that wants to coerce you, that organization that wants to attract you, do you know what their interest rate is for loan? He said he doesn't know. I said, because I'm privileged to to manage a community on total rewards, I will help you out. Go and ask so and so person what their interest rate is. So he came back the following day. Felemu, man, only came back offer, meaning that it's God that said I should not accept that offer. Do you know that their interest rate is about 11%? I said, can you imagine? So you are leaving a 3.5% for 11%. Mind you, they will never tell you before you go in. So that is why, you see, total rewards is interconnected with talent acquisition. In some organizations, total reward is a sub-unit of talent acquisition. And in some organizations, it's a standalone. In some organizations, it is being managed by the finance department. In some organizations, it is being managed by purely HR. But what I want you to take out from this session is that whatever the scenario is, where you are or wherever you are going, at least you know the rudiments of what total rewards entails. Now, speaking back to the slide, I took us shortly on short-term incentive, where I mentioned about sales commission, performance bonus, annual incentive plan, discretionary bonus plan. Proceeding to long-term incentive plan. You see, the essence of a long-term incentive plan is to sustain your talent optimization. Talent optimization such that you attract the interest, you attract the interest of your employees. I'll give an instance. I know some organizations that practices equity incentive schemes such that they get payouts in the form of shares or in terms of cash. Organizations are introducing LTIs as a reward tool to align their leadership interests with that of shareholders while motivating and rewarding sustained performance. Now, I'll be proceeding to compensation philosophy. In layman terms, what is compensation philosophy? Compensation philosophy simply means the capacity of an organization to profile rewards, tangible and intangible, to an employee or to a new hired. Before now, I've always said it that there are things that no organizations can do for you. And I'm telling you, there are things that no organizations can do for you. I'll give an instance. Let's talk about the big name oil and gas. I've been privileged to work in oil and gas too. Let's talk about the indigenous oil and gas sector. I know of a company, it starts with the alphabet S, but I don't want to. I'm sure many of us that we are social media savvy. The graduate training of that oil and gas company alone earns over 2 million naira net salary. What does that imply? That implies that their revenue portfolio can absorb the compensation, the salary analysis to onboard a new hired or to retain a graduate trainee. Now, what is a compensation philosophy? A compensation philosophy is a formal statement that outlines organizations' approach to employees' pay and reward. It defines how pay supports business goals, attracts talent, reinforces company values. Core components of compensation philosophy. One, you have to take a look at the market position of that organization. What are the pay mixes? What are the pay variables? What are the performance links? Now, what are the compliances and transparency and nomenclatures of that organization? Now, the guiding principle behind compensation philosophies are fairness and consistency, pay for performance culture, transparency and communication, as well as competitive and sustainable reward. Now, why does compensation philosophy matter? It matters because a clear compensation philosophy builds trust, aligns employee efforts with business goals, and provides a framework for making consistent and strategic pay decisions. Now, have you asked yourself, why is it that when a staff is about to resign from an organization, a good number of organizations will say, oh, can we renegotiate? Can we match it? Okay, can we discuss further? Why? Because that recruiter knows that whatever they know the capacity they can absorb an employee's interest, an employee's pay, an employee's reward. So I used to say that there are certain things that no organization can do for you. I'm not generalizing it. I'll give an instance. You can't work in a let me narrow it down to Osun State. Don't let me use Lagos State because we are all familiar with a number of things in Lagos happening in Lagos. Let me narrow it down to Osun State. If you are working in a bread factory, for example, and you are privileged to report maybe to the senior executive, and you get late to work, and they ask you, how are you coming late to work? And you say, it's because I was stuck in traffic. And your supervisor says, okay, what if you get to a bicycle? And you go by the saying, sir, a bicycle won't help me because of the kilometer I cover on the daily. I still have to come to work on a Saturday. And the supervisor says, okay, what if we talent acquisition expert says that, okay, what if we get you maybe a shuttle bus? Your taste increases, and you're like, oh no, I want a G class. Automatically, you know that it's beyond the compensation philosophy, the compensation bandwidth of that organization. So what am I trying to say in essence? What I'm trying to say in essence is that it is very important as an HR professional or as a business professional to know the compensation philosophy, at least have an idea of what an organization can do for you and how far they can go for you. So this will bring me down to compensation philosophy factors. One is the level of requisite knowledge and skill attached to that role. Another thing is the industry you're operating in. You don't expect that a person who is working in construction will be earning the same compensation with someone who is working in oil and gas. As such, you can't compare the oil and gas also to bank. Also, you can't compare bank to mining. Just as you can't compare mining also to what else again? We can't compare mining to another sector. So another thing you have to look at is the size of the business what's the philosophy of the management, what's the profitability of the organization, talk about the financial capacity, the efficiency, and the size of the organization, talk about the employment stability, talk about the employee tenure and performance. This will bring me further to what constitutes salary and pay structure. I'm sure many of us are familiar with this topic already, but the essence of why I'm bringing this topic before us is because of the new tax reform bills that is currently being reviewed by the Senate, and once it is approved, it will be considered for adoption, and after 3 months that has been signed by the presidency. So, what constitutes salary? We have the base pay, we have the housing, we have the transport, we have the variable pay, we have others such as lunch, utility, furniture, education, entertainment, leave, wardrobe, etc. So this is a typical pay grade, job grade rather. We have the managing director, we have the executive director, narrowing it down to management trainee. As well, we have the different cadre. We have the junior level, we have the middle level, we have the senior level, we have the executive level, and beyond. So looking at the horizontal, you'll be seeing the HMO, you'll be seeing the group life. These are all, components of pay variables. So now moving forward to creating pay grade. What is a pay structure? A pay structure is a hierarchical group of jobs or salary ranges within an organization. Salary structures often are expressed as pay grades or pay bands that reflect the value of a job in the external market or internal value to an organization. A pay structure consists of a series of pay ranges or grades, each with a minimum and maximum pay rates. Jobs are grouped together in ranges that represent similar internal and external worth. This is a typical sample of how a pay grade is created. Then we have what we call notches or various different steps in a pay grade. We have an example here where we have step 1 to step 9. They can either be called steps or we can call them notches. Moving forward. So now this is the most interesting part of total reward. And I can assure you that if we can have mastery, if you can get mastery of these aspects, like I started by saying that you don't have to be an expert to earn well in total rewards. I recall when I started total rewards, I was in the salary of about 140,000 naira net. And I gave it more commitment and more commitment, and I tested different industries. And one thing I found as a testimony is that your compensation as a total reward professional across industry will differ. Across industry, it will differ. So I'm not only here to teach us about how understanding what total reward entails, but to try and convince us that it takes nothing to gain mastery of what total reward entails. It takes absolutely nothing. It takes absolutely nothing. So this will bring me to the regulations and legislations around compensation. I will start with pension contribution. The Pension Reform Act 2014 creates a uniform contributory pension scheme for the public and private sectors in Nigeria. And every employer in the public and private sector that have 15 or minimum or more employees will participate in CPS for their employees. Members of the armed forces, the intelligence, the secret service of the federation are exempted from CPS. Also, CPS is optional for expatriates, as foreign individuals often keep their offshore pension plan. Now, without talking too much of stories, the employer is expected to remit 10% of the basic housing and transport, while the employee is expected to remit 8% of the basic housing, and transport. I will be proceeding to the next slide. Thank you. So we've discussed pension contribution. The second one is NHF, contribution to the National Housing Fund. So the National Housing Fund is managed by the Federal Mortgage Bank of Nigeria, and the main goal of NHF is to offer loans to Nigerians for developing, buying, and renovating houses. Contributors of the fund can get a long-term loan from the mortgage institution, and employers are required to deduct 2.5% of monthly gross salary. However, it is not compulsory. It is optional. I'll take that again. It is optional. It is no longer compulsory. I'll be moving forward. Thank you. So the third thing we also have is the contribution to NHIS, the National Health Insurance Scheme. NHIS provides easy access to healthcare for all Nigerians at affordable rates, and it is the essence of it is to serve as an health insurance cover. An employee's contribution to NHF and NHIS and an approved pension fund will reduce the net pay of that employee. The revised method for determining gross income is based on Finance Act 2020. That particular sentence relates to the Personal Income Tax Act. Now, the one that is quite dicey, and is, in fact, is one of the main reasons why many HR professionals run from total rewards is payee tax. Payee tax. You see, many a times, those who have accounting background are they soar, they fly, and they excel when it comes to managing total rewards. But you don't necessarily have to have a background in accounting and finance like me. You don't have to. It's not a must. If you can take your time to digest every of these nuances I have called in, and you can reach out to Dr. Oluyemi, or you can reach out to me on LinkedIn, I'll be willing to assist. So moving forward, payee tax. The Personal Income Tax Act 2020, Peter Act, covers the taxation of individuals. Under Peter, taxable persons include employees, sole proprietors, assistants, and partnership. The payee tax rate ranges from 7% on taxable income of 300,000 and 24% for above 3.2 million. Furthermore, an employee handles deducting and remitting monthly taxes on an employee's salary. The due date for remitting monthly payee tax to the relevant tax authority is within 10 days of the month of deduction. Self-employed persons will file an annual self-assessment returns by 31st of March of the next year. Penalty for late filing is 10%, as well as interest at the ruling bank lending rates. One thing I want to bring out of this session is that once you can have these formulas at your fingertips, you will strive in total rewards. You will strive in total rewards. Now, within the face of payee tax, we have what we call reliefs and allowances. Some people will say, the English you are saying is too much. Some people will say, I don't like calculation. Calculation is not my giving. The truth of the matter is that there's no profession in HR that is not calculation related. It might be minimal. Trust me, it might be minimal. However, you should not allow the calculation aspect now cost you expensive opportunities. So moving forward, reliefs and allowances. I have about 7 of them here. These reliefs and allowances are consolidated relief allowance, which is subject to 20% of gross income plus the higher of 200,000 or 1% of gross income. I will show us a table before the session ends, to guide our understanding of how to prepare a typical what I call it now, payroll, using the Personal Income Tax Act table. So we have also the life assurance paid, which says that actual premium paid in the preceding period of the life of one or spouse, any amount paid as deferred annuity to any insurance company on the life of one or his or her spouse. Then we also have contribution to pension fund, which is 8% of monthly emoluments for the employee and 10% for the employer. People often ask me that, oh, is it wrong for an organization or for an employer not to remit pension until the employee is confirmed? You see, the policy of an organization does not supersede the Pension Act. So my candid advice is to avoid the likelihood of attracting sanctions and slams. Advise such an employer to remit as the law has stipulated. So I also have National Housing Fund, 2.5% of monthly salary, National Health Insurance Scheme, which is 5% of total salary, donations to recognized research center, which is 10% of taxable income, then cost of equity participation, which is 25% of total statutory income. These are just nomenclatures revolving around the constructed relief allowance to guide our understanding. Now let's have a typical a simple example here. We have a monthly net salary of 60,000. Then we have monthly pension contribution of 3,120, and the monthly gross income of 56,880. We have the old monthly payee, we have the new payee. We have a difference of 68.4. All right, one thing I want to bring out of this session is that this pension tax, that's the Personal Income Tax Act of 2020, will be, in fact, it will be revised. And thank God we have ChatGPT and you have a Google engine to guide our understanding on the ongoing New Tax Reform Act 2024. So once this being passed, we are going to have a more practical session by H2 by the grace of God. So this is currently the tax band within the personal income tax table. The income tax band says that you deduct the first, if let's imagine an employee is earning a salary of annual of, let's say, 1.2 million. What it means is you deduct the first 300,000 at the rate of 7%. You get the tax amount, the next 300%. You see, it's very important to understand this aspect of payee, because it is highly regulatory. Another thing I want to encourage each and every one of us to know is that try as much as possible to learn more about every of these regulatory legislations guiding compensation. No knowledge is lost, and the gains are yours to keep. Talk about pension. You remit your pension on a monthly basis. Talk about annual filing. You file your returns, and you ensure that you pursue the issuance of your pension certificates. That is within this purview of pension contribution. Narrowing it down to National Housing Fund, ensure that you collate the evidences of those you have remitted to, those remittances you have made to Federal Mortgage Bank of Nigeria, and ensure that there is transparency of records for your employees, such that by the time they have exited the organization, they can easily make reference to your good works. Now, talking about payee. Payee, Personal Income Tax Act is it houses payroll management, and it is managed by the Lagos State Internal Revenue Services, LIRS. It is a state administered what they call it, revenue. So if your organization is outside Lagos, you have a branch in Ogun State, the law is that it binds an employee on the subject of their residency. So what it means is that if a Daniel is staying in, let's say, Osun State, for example, but Daniel is working in Lagos State, Daniel's organization owes it to Osun State Internal Revenue Service to remit Daniel's taxes to Osun State. Because of that is where Daniel is residing, and not because Daniel is working in Lagos. So I will move on to Industrial Training Fund. Every employer with at least 5 employees or an annual turnover of 50 million must contribute 1% of its annual payroll cost to ITF. ITF aims to equip workers with adequate training and skills for economic development. The truth of the matter is that for organizations that try to buy their way out of ITF, they will end up attracting sanctions. So I have mentioned payee, I have mentioned pension, I have mentioned ITF, I have mentioned what do you call it now? I've mentioned what's the other one again? I've mentioned NHF, thank you. So then we also have NSITF, contribution to the Nigeria Social Insurance Trust Fund. Employers contribute 1% of employees' monthly payroll to NSITF in the first 2 years of commencement of the Act. NSITF board will perform a risk assessment to classify contributions on workers' exposure and estimate the appropriate payment. The contribution is not a deduction from an employee's monthly salary. Rather, it is a statutory payroll contribution by an employer. So it is also important for us to distinguish between costs that are borne by an employer and costs that are borne by an employee. So payroll calculations, moving forward. We have 2 types of payroll cycles. We have the linear payroll, we have the cyclical payroll. Linear payroll is where the salary is calculated using the months of the question. That is the last, it could be either between the first and the last day of the month, or cyclical payroll, which is where the salary is calculated starting from a day in the previous month. Now, consideration for payroll calculation. To start calculating payroll for a month, there are many items to consider. And this depends it varies from organizations to organizations. While some organizations are strict with this, some organizations are lenient. So moving forward to the pay elements of of payroll, we have the annual gross, we have the monthly gross salary, we have the monthly net salary, we have the basic allowance, we have the housing allowance, we have transfer allowance, and other allowances. So at this juncture, I would want to entertain questions. Over to you, Doctor. Thank you for the time. Hello, Doctor, are you there? Hello, Doctor, are you there? All right. Are there questions for me from the general house, please? I can see we have a number of participants from outside Lagos. I can see Olani Isheri from Ibadan. We have Noah Okutachi from Abuja. Oh, thank you very much. We have Favor Daniel from Port Harcourt. Thank you. So at this juncture, I would just pause and hold on for Dr. Oluyemi. Oh, thank you, Jovita from Abuja. So to shed more light one more year, thank you very much. Thank you for joining the session. At this point, I want to shed more light to payee. I had mentioned that it's a state, it's a state administered, it's a state administered tax element. So for Lagos State, for staffs that are resident in Lagos State, you remit to LIRS, which is Lagos State Internal Revenue Service. Okay, someone is asking a question. I will come to that question. So if you're in Abuja, you remit to Federal Capital Territory Internal Revenue Service. Okay, I have a number of questions here. Okay, let me take the questions one by one. Hello, Daniel. How do you create a compensation philosophy? Interesting. How do you create a compensation philosophy? What you're basically asking me is, how do you design a compensation philosophy? You have to take a look at start with the philosophy of the management. You need to understand the internal equity and external equity that may likely influence that organization. That is one. The other thing you need to take a look at is you have to look at their compliance rates. Is that an organization that is willing to comply? Is that an organization that is not willing to comply? If it's an organization that is willing to comply, smooth sail. If it's an organization that is not willing to comply, at least have it on the books that you have said it on record, documented, such that when infractions will be attracted, you will not be held liable as a reward person. So another thing you need to take a look at is industry benchmark. What you want to pay your employees, is it realistic? Can it stand the test of time in the industry as far as compensation is concerned? Many a times employers don't know that when you think you are short paying an employee, you're actually robbing yourself. In fact, you're robbing yourself of the employer robbing themselves of productivity, because the employee will not be passionate, will not be zealous about serving that organization committedly. That's why you have organizations where some staffs will be having. There's nothing wrong with having multiple streams of income, but what I'm saying is that the time you are supposed to designate to labor for that organization, it will be eroded because of your interest is in something else. So you have to look at those nuances. The other thing that can guide you is remuneration survey. Ask questions. What is practicable by your contemporaries in your industry? That will assist you to design a compensation philosophy. So I have another question here which says that, please confirm when an employee can access pension for mortgage or other uses. Well, that is dependent on the custodian, the pension fund custodian, depending on the kind of benefits they want to grant to you. I don't want to, I've tried to be professional. I've not called any organization here, and I don't want to call any organization. So you might need to consult your pension fund custodian to get the best of benefits as far as mortgage facilities are concerned. Then we have another question, which is, as an HR professional, how do you initiate this total reward in your organization? How do you initiate total reward in your organization? That was why I laid emphasis on pay grade and structures. You need to ask questions of what is obtainable in your industry. How you find yourself in irrespective of where you find yourself, try as much as possible to mark with ways to do what? to attract, to motivate, and to retain the best of talent, which is geared towards talent optimization. We have another question which says that an organization who has never contributed pension or pay, if they decide to start contributing, what is the penalty? I just hope that organization is not in Lagos, because if that organization is in Lagos, even if you go through the fence, they will pay for it. So to answer the question on the lighter note, what is being done is that backdates from when the organization started operations. In some instances, they will even go as far as asking you for your corporate affairs, documents. They will ask you for just verify that what you are saying is true. So for an organization that has not paid pension, I will advise them, get registered, and get registered, deduct what you are supposed to deduct, don't shortchange, and don't overbloat it. And at the end of the day, you get transparency for your records. Get transparency for your records such that whatever is being remitted, you have it documented, and at the end of the year, you can use it to pursue your pension certification in the new year. Then for payee, deduct what you need to deduct, and just a minute, please. Rates. So if you have not been remitting pension, if you have not been remitting what they call it, payee, I would encourage that you do it as soon as possible. Don't wait till half of the year. Don't wait till half of the year. So let me come back to the other questions we have. Can you please speak to the impact of the proposed tax reform when it's implemented? Yes, we're going to have a session in H2 to guide the nuances and practical for one, for early career starters in HR. Enhance our understanding of the rudiments and the basics of total rewards. So we're going to have that session in H2. Thank you very much. Please, I need guidance. So let me proceed further. Many organizations don't obey policies, provide HMO, remit pension, NSITF, etc. Which government body is responsible for implementation, and how do these bodies monitor effectively to ensure compliance? The truth of the matter is that let's just be prayerful that we don't fall into the trap of these regulatory agencies. Because one thing I've realized over the years is that many of them will not come until they realize that the is full. When it is full, I mentioned earlier on, you pay for late filing and you pay interest on that late filing. So I would advise that nobody should wait. So we have government agencies, irrespective of the sector you find yourself. We have government agencies everywhere, but when there's no when there is no adequate monitoring, you know, I'll give you the cheapest. Soak yourself in webinars. Soak yourself in webinars. In fact, that was how I started. I started by soaking myself in webinars. By the time I was applying for a total rewards, in fact, by the time I applied for a deputy payroll manager in the construction company I worked some years back, I had no prior knowledge about what payroll entails. And I'm being honest with you. But because I had soaked myself in webinars, practice and practice and practice. Trust me, consistent practice will make you a master over time. So just give yourself to webinars. This is not the first Total Rewards webinar to be facilitated on HR Mentorship Learning Series. I think we've had about 2. We've had one by Mr. Patrick, and we've had one by, I think we had one about 8 months ago by Patrick. Then we had one about, I think 2 years ago by Dr. Liam Adeosun. So it is still applicable. It is still the current adoption. So just, download it. I can give you guide anytime you need me. Even if you have interviews, you can reach out to me. I will help you out, and I can assure you that you excel in it. So I'll move on to the next question. So you don't have to wait until you start CIPM for you to be grounded in HR, in Total Rewards. No. Take it bit by bit. Bit by bit. I remember when I started, one of the phobia I had was, how will I move from 140,000 naira salary to 350,000 naira? But that's a thing of the past now, because I'm on a larger testimony to the glory of God. So please, I would appreciate some clarification regarding NHF and health insurance. I understand that NHF is 2.5% of basic salary. No, it's not 2.5%. It's 2.5% of gross salary. It has changed. It was formerly 2.5% of basic salary. It's now 2.5% of monthly gross earning. So meaning that it has increased. Okay, and health insurance. Okay, while health insurance is 5% of basic salary as well. However, I noticed in your slide that NHF was captured as NHF was captured as 5% of monthly salary, and health insurance is 5% of it. Was just coincidental. So, okay, NHF was captured as 5% of monthly salary. Really? Let's take a look at that again. Just a minute, please. This is it over here. It's 2.5%, not 5%. 2.5%. All right, thank you. So let me move on to the next question. I hope that clarifies that, Comfort. Thank you. What happened to an organization that pays only pension for managers alone? Okay, the organization pays pension. Please, can you please clarify your question very well? That pays pension for managers alone. So that means that organization is evading tax. It's a criminal offense, and it will attract sanctions. So I think I must have answered that already. If an organization is paying pension alone and it's not paying tax, that organization is not complying. So I would encourage such an organization to try as much as possible to, clear their tables and do what is needful. An organization that is paying only pension and not paying tax is shortchanging the staff. Now, there's something called tax clearance certificate. Tax clearance certificate is an authentication that an employee is remitting taxes over the years or over a period of time. So in an organization that is paying pension, by the time such an employee leaves that organization, what it implies is that there will not be any record to trace for such an employee for tax compliance certificate requests. Now we have a number of occasions where both staffs that has probably jackpot or probably have gone abroad, we need their tax card. In this case, how will such an employee be issued a tax card to even start? Because there's no even record that the organization remitted tax for such an employee. So this is like robbing Peter and robbing Paul. That's the truth. So the organization is shortchanging themselves and shortchanging the employee. And at the end of the day, we attract sanctions and penalty. So I don't know if we have any further questions while I hold on for Doc. So Okay, I can see. Nene, please, can you?
Hi, Daniel. Well done. Fantastic job. So, going
Yes.
back to this question on an organization that is evading tax. Now, in a
Yes, please.
situation, in a situation where maybe an employee that had exited that organization now is trying to, build records based on the fact that the individual had worked in that organization. Please, how will this be resolved? Will the authorities penalize the employee, or will they use this and now begin to trace back to the previous organization where the employee had worked? Because this
Sorry,
can,
please,
this,
can you take that? Can you take that question again, please?
so what I'm saying is, what would be the potential risk for an employee who had left an organization where tax
All right.
was not paid, was not remitted for him or her? How would this be resolved?
All right. Let me take it at that.
Okay, thank you.
You're welcome. So the truth of the potential risk is, one, there's a financial risk, because a case where the employee leaves the organization and possibly wants to acquire maybe a government property or maybe a government asset, or probably has a court litigation and wants to reduce liability, or probably such an employee travels out and needs to, I have occasion instances where ex-employees travel out and they demand for their, evidence of their tax remittance, be it UK, be it US, be it Europe. You understand? So in such a case, that employee will carry the weight of the financial risk, such that they will have to cough out, fund out of their own pockets, so as for them to be able to fast track the facilitation of their tax evidence, their tax remittance. So that's the financial risk on the employee. I don't know if you get that. That's the financial risk. But now the legal risk it has on the employee is that you will be shortchanged. That's just it. So it means that what the organization is meant to remit on your behalf, except in a case where the organization is not deducting tax. So we need to get the differences. An organization, it's possible for an organization not to deduct tax from your overall compensation, and they are remitting just your pension. Why? Because they are not deducting tax. And I'm sure that's such an organization, in most instances, they would have told the new hired as they are joining that, oh, this is our, or if they don't tell you, you will see it by the time you are demanding for your pay slip. I don't know if that clarifies that. So, but in a case where, it is deducted, you are seeing it on your offer letter that this is the composition of your tax deduction, and that organization is not deducting. My candid advice is whistleblow. When I say whistleblow, call it to your employer. It is in my offer letter. You are meant to deduct the tax. So if you are deducting the tax, where is it going? It is your right. It's your fundamental. It's your civil rights. It's your civil rights.
Thank you so much. Thank you. I think it's just a dicey one, in the sense that, okay, why I know we work in different environments, and where we see things like this, it begins to open our minds to say, do I really want to stay in an environment like this? Because if this is not cleared, and the individual leaves an organization, you begin to bear the wrath of the law, because certain things were not done for you. But again, left for me, Daniel, instead of me bearing the cost of this, which an employer should have done, I will go back with my lawyer to my former employer to request for my tax payments, because I have done what I'm supposed to do. You have deducted, but you didn't pay. Now, if I now need something like that, or if I need the opportunity, or if I need something that can help me resolve certain issues as a result of my tax payments, and I don't see why an employee should innocently bear that. This is my own view. Okay, but I stand to be corrected. Thank
All
you.
right. No, you're correct. Okay. I remember a case of, I had a contact that called me from UK, and it was like, Daniel, I will pay you the money. I want to drag this company. They deducted my taxes. They deducted my tax. And I said, just consult your lawyer. Consult your lawyer, and you can whistleblow to the authority. You are backed by law. If it is Abuja, reach out to FCT IRS. If it is, I'm telling you, I put it to you today. If you involve the State Inland Revenue Service and you copy your lawyer, they will remit it. In fact, they will fast track the remittance. I don't know if you understand what I'm saying. They will fast track the remittance. So the first guy called out to me, Daniel, please. And I was like, I don't have energy for this, but I can guide you on it. You understand? So engage your lawyer. And if nothing is forthcoming, this will blow. Call it to the tax authority. In fact, they will even compensate you. The tax authority will compensate you. That I know that it worked. It has worked in time past and it is still working. Thank you very much. All right. So let me see if we have any further questions. In a situation where an organization has full-time staffs and contract staff, hence pay pension and tax for only full-time staff, but does only tax for contract staff without pension. That's wrong now. It's a wrong practice. Oh, okay. Now we have someone asking now, what if the company folds up now? Why? Interesting. Okay, I think you already have a question. You have a response from Dr. Oliem saying that what if the company had folded up? All right, so in a situation where an organization has full staff and contract staff, pays pension and tax for full-time staff, and pays pension for contract staff. If you, from the context of contract staff, what it means could be two things. It means that contract staff was outsourced. So it is the responsibility of that contract staff to demand for the taxes from his or her recruiter. That's the recruiting agency. I think that clarifies that. So, Doctor, please, I'll leave the floor to you now. Thank you very much for your time. I know that we're meant to have a practice session. We're meant to have an Excel practice session, but because of the current practice is gradually phasing off, and due to the new tax reform act that will be considered for adoption before the end of the year, once the Senate approves it. So we're going to have a more thorough practical session by the second half of the year. And it won't be this granular. I won't go this granular in that session. Thank you very much. Doctor, over to you, please.
Thank you so much.
Any further questions?
Thank you. This has been excellent. Value for time. Thank you for your sacrifice and investment. Ladies and gentlemen, let's wrap up by appreciating sincerely Daniel. Please, we can unmute and say thank you as we call it a wrap for tonight. Thank you so much, my brother.
Thank you so much, Mr. Daniel. We really appreciate you tonight.
Thank you,
Thank you, Daniel.
Thank you.
Thank you, Daniel. Thank you so much. Thank you so
Daniel,
much.
well done. No.
Thank you. Your boy is talking.
Thank you, Daniel.